Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in this week to see what we're going to talk about, what happens in the mortgage industry. We bring to you information each and every week about that exact information that you're going to need when you get out there and buy a house, or when you want to sell a house, or when you want to do all things related to real estate. Now, we want to talk some initially during the show about what's happening in the world, what's happening around, which may affect your decision making, which may affect the market that you live in, the house that you want to buy, and all such things. Certainly in the spring, we talk a lot about spring buying season. What happened to the housing market? Where is it going? Where are the houses themselves coming on the market? Are we building any new houses? A lot of this information we're going to try to deliver to you. But today, to start off the show, and again, I'm Jeff Barton. This is The Mortgage Voice. You can see this show if you go to YouTube. Jeff Barton, The Mortgage Voice is on YouTube. We put this show, which we've been doing, for a number of years, hundreds of shows, and you can see it's there if you go there each and every week. If you want to see what I look like, and certainly pictures and address and way you can get in touch with myself or the guests that come on the show, you can go there to do that. What I wanted to do to start off the show is, we're in a type of real estate market which is somewhat strange. We're dealing with a lot of macro forces, i.e. inflation, whether the country's going to go into a recession. You're dealing with employment, unemployment, all things that concern you here home. Abroad, we're dealing with the China-U.S. relationships and how that affects markets around the world. What happens to the dollar? Where's the economy going? And certainly the war in Europe. All of these things are what we think about on a daily basis. How does this set up for the person who wants to just sell their house over in San Bernardino? All right, I'm selling my house and I want to be able to get as much money as I can, and I don't care about the rest of this stuff. I just want to be able to, get in there and get as much as I can. Is it that simple? And how exactly does the market forces around that type of sale affect the list price, the demand on the property, how many showings you're going to get, what's the best way to get the highest and best price? We talked last week on the show about how some companies, corporate America, and how the profit margin is the best thing or the worst thing or the medium thing for the country. When it comes to selling your house, and it's your house, and it's a very personal thing selling your house, it is absolutely about getting the best possible price for 99% of the people. There are 1% of the people out there who will say, no, you know what, I want the right person. Yes, I want a high price, but I want the right person to get the house that we're selling. So when you hire a realtor, my suggestion is to always try to talk to a realtor at least. You might want to go the for sale by owner route, but statistics have shown that you're probably going to get your best deal and be protected the best if you work with a realtor, somebody who's in the business and who has a real estate license, especially here in Southern California. What do you do when you're talking to a realtor? Now, a realtor, and they're always different types, right? They're the realtors that are come in and say, how much do you want for your house? Yes, we can get that much for your house, and I'm going to price it for that, and it's going to take 2 weeks for an offer, and blah, 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 and all of a sudden 2 weeks come and the offer doesn't happen. And then they come to you and they say, you know what, let's lower the price because it's not selling, and here's the feedback from the 10 people that have seen the house. That's called buying a listing. Anybody out there understand what that is? It means that the realtor is willing to say anything to you in order to get that listing, because they know 99% of the people who are selling a house, once they sign with a realtor, stay with a realtor. So buying the listing is really the way to secure that first position for the realtor. There are the opposite of that, which I would call, the honest realtor. And I put that in quote because what they're going to do is they're going to say, look, your house needs work. And I don't care what condition it is, this is what they're going to say. Or they're going to say, your house is stupendous, but the market conditions are such. Or the neighborhood doesn't bear up the quality of your home so people shopping in this neighborhood won't expect to pay X amount of dollars for it. The main thing and the best thing, I think, the approach that the seller and the realtor is to really, let's look at what we have. Let's look at the condition of what we're selling. Let's look at the marketplace that we're selling it in and the expectation of what we're going to receive as an offer. And here are the 10 reasons why I think that this is the selling price that we should settle on and agree upon today. That is a middle of the ground, real straightforward approach as to the marketing of any property. Now, of course, when you're in a transaction, you want to make sure that the realtor themselves is a pretty good negotiator. So obviously you're looking at the track record. You're looking at more than just, sales numbers. You're looking at, okay, you represented X amount of sellers last year. Where did you start off at the listing price? And where did you end up selling price? Now, we know last year, in particular, 2022, first half of the year, you could throw it against the wall and it was going to sell. It didn't matter because the house prices, regardless of what they were going to be, because there were so few of them and that the economy and that the mortgage rates were so low, that it didn't matter. You had tons of buyers out there. So you could basically set your own expectation. I want this amount of money. I don't want to have any contingencies, and I want to close in 25 days. Well, you can't do that now because the market has changed, and we're going to talk about that on the show a little bit more. So when the market changes and you have a realtor that does either the first scenario, which is to, buy the listing, or the second scenario, which tries to beat you up to get the lowest price, you end in the middle to a reasonable, smart, really knowledgeable in your area of that type of property in this particular market. That takes a lot of savvy. It also takes a lot of education and experience in a given neighborhood. Now, you have lots of realtors out there to choose from. And when you go to see a realtor, understand that they're going to want to set your expectations at a certain level. Make sure that when you choose the realtor, you're choosing the realtor that best suits what the property is, what the neighborhood is, what the market conditions are, and that you're also well aware of it. And obviously there's things like fit and do you like each other and can you respect, the decisions that are made by your realtor on your behalf. All of those things are important. But those are the kinds of things that are really important in a market like we have now. So let's look at the market. What do we have right now? Okay. Few statistics, news to use section, let's throw it out there. 30% of home builders reduce price. 59% offer incentives. This is new home builders. This is what's happening. So if you know up to 15, Hesperia and a couple of other cities up there off the 15, they have new homes and they're selling the new homes, but this is what we're seeing in the marketplace. 30% of the home builders are reducing price and 59% of the home builders are offering incentives. Now, new home building and new home sales is a completely different kind of animal because you're really dealing with the home builder every time you walk in the door. So anything you see is marked up. The incentive is even marked up. So they say, hey, if you come in at this price, we'll throw in the tiles. Well, we know the tiles are already priced into what you're buying the house for. So anything below that means that you're buying at a premium. You want to buy at a discount, right? That's really what you want to do. Okay. Private housing starts, 1.42 million, down 0.8% from February's numbers. So these two numbers show you that private builders infill what they call, you want to buy your own, buy a lot, build a house and sell it. Those are small-time builders, and the incentives and also the discounts that they're offering at major home builders are telling you that the profit margins aren't there. And they're afraid that the buyers won't be able to buy because the mortgage interest rates are too high. Let's talk a little about why that is so. Okay, home prices go down. And this is all from Bankrate, right? Why do home prices go down? And this is the why we're fighting in this market, not enough new homes being built. Okay, home prices go down for what? Mortgage rates. That's what drives houses down. Mortgage rates are now about 6 to 6.5% on a 30-year fixed rate loan. The inventory, there is none. So that's another reason why house prices will go down. Why? Because if you can't afford what you're trying to buy and there's too little of it, they've got to lower the price. Setting expectations. Inflation. Well, obviously, if you've got inflation at 5%, which is what it is right now, you're going to see home prices fall as well, because what you used to be 2-3 months ago selling a house at is now 5 to 10% less than it was just by inflation and the local market conditions. All of these things are why house prices go down. Glad we had a chance to talk about that. We'll be right back. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, and I am happy to be here. We have a number of different guests that come on the show each and every week. They tell us about what's happening both in their life as well as what's happening in the marketplace, how that can help you. When you're out there and you're searching for a loan officer, or you're searching for a real estate agent, or you're trying to find somebody you can trust, the main thing to do is to try to sit down with them, have a conversation, figure out exactly what is the best thing for you to do. I know that in an earlier section in the show, I talked about expectations on buyers, on sellers, on what a buyer is going to expect from their broker in terms of both communication styles as well as information accuracy, how quickly they have to be involved, and do you want to be involved? So in terms of that, we went to our go-to person down in Arizona, Joan Rebaza, who joins us now, is a great loan officer down there. Joan, how are you?
I'm doing great. Thank you, Jeff. How are you today?
You know, I'm okay. I mean, I've had, it's such a bizarre life. Things that happen to me on a personal level rarely affect my business. However, recently we've had just so many things go on that it's hard not to have that happen. And I know, for instance, when someone is buying a house, that personal into, this is a business decision, really. I mean, yes, it's personal, you got to live there, but really is a personal decision. How do you connect with your particular borrowers when they're talking about, I want to buy, and it's emotional, and you've got maybe two people in the process that you're dealing with? What's the best way that you can set their expectations as to what the process is going to be, as well as what to expect?
Yeah, that's a really great question. I tell you, when I first start working with borrowers, I ask questions about them without infringing on, really any privacy, but
right.
Just things that I think might be relevant to why it is they're buying, whether they're moving or whether they're going through life changes. Because knowing about the person and me being invested emotionally in their situation really helps me give them the best service that's possible. And I think they have a lot better experience with the whole transaction from start to finish. Buyers and sellers, just the whole team that puts the transaction together. So really, that's what I like to do. I like to find out who I am as a person, because who they are as people, because I don't want them to ever think that they're just another number. So that's very, very important. It's their person, and this transaction is part of their life and has a lot to do with what they are and
right.
how their life is going to move forward.
I have a doctor friend of mine, and I go there. He's not really a friend. He's a doctor, right? So I go there, and there's two approaches to the doctor approach, right? There's the doctor, which is very clinical. Here are the numbers. Here's what you got to do. Leave the office, and you have no association with them at all. The job gets done. It's professional. Some people like that approach, some don't. And then there's the other doctor, like I was saying, the friend, the person puts their arm around you and tries to give you some moral support. I think there's a fine line between one and the other, because sometimes you get into a situation where you're too close to the person you're trying to help, and you really can't give them the type of hard advice that they need to hear.
That's a good point. And, it's really important. I kind of exercise the do unto others approach in all aspects of my life. And there is a fine line. Like, I think about, if I was going to someone, I'd absolutely want them to stay professional.
Right.
And that's really, really important. I want them to exercise their experience and, their expertise. But I want them, I would want to feel like again, like I'm not just a number. Like they really do have my best interest at heart.
No, I think that's a good idea, a good way to go. I mean, yeah, it's just anyway. Let's switch gears just a little bit. I wanted to talk some about what's happening in Arizona. Where do you see market conditions happening down there? I know in Southern California, where the show is broadcast, we see some of the property values going down, I guess is the way to say it, lowering. Expectations of buyers is there may be a way by which we can get into this market if real estate mortgage rates come down to about 5.5%, 5.5% to 0.75%. I don't know. What's it like down in Arizona?
Yeah, that's what it does seem to be happening, that the values do seem to be getting a little bit less. We've gone from a seller's market, we're kind of leaving that more to the buyers having a little bit more luck, but there's not a lot of inventory out there.
Right.
So that's what my real estate friends are telling me.
Okay, so and when you speak to good point. I think there's a symbiotic relationship between realtors and mortgage loan officers, and I think the good communication that you can have between those two people to really just not only inform the buyers of what's happening, inform the borrowers of what's happening, but also keep the sellers in the loop as to what's going on. Arizona, like a lot of states, have a form by which the loan officer has to fill out on a weekly basis as to what the progress of the loan is. You want to explain a little bit about that, what that form is?
Yes, and we've kind of talked about this maybe in another conversation, but the no news is good news is not applicable in mortgage lending.
That's so true.
So just to be able to give people on a weekly basis just a little update, so that they feel comfortable, like, oh gosh, this has happened, or we've talked about this, or I've received this piece of paperwork. It's very, very simple. It literally takes seconds to do an update, but the peace of mind that it can provide to everybody in the transaction is immeasurable.
No, I think so too, and I think for our listeners here in Southern California, and obviously those on YouTube and a number of the other podcasts that we broadcast to, will go, oh wow, I wish my particular state or county or realtor or loan officer would provide me with some updates. I think communication is always the key to everything. Now, I know because I'm, the person who runs a lot of this through my head all the time. If you get somebody that needs to have updates on a daily basis, that's way too much, and nobody can be expected to do that. It's just, you have too much to do. There's a lot going on in the business. But how often do you think, or do you communicate directly with your borrowers?
Well, it really depends on the transaction. There are some borrowers that I communicate with every couple of days, especially if there's something that, like on maybe in an FHA loan where we need to take care of some particular fixes.
Okay.
So it really is more like case by case, but I would say that never a week or 3 or 4 days even go by where they don't hear from me.
That's outstanding, because I can tell you from experience, having been the boss of Malibu Funding for, 25 years, it's rarely a week. Rarely a time where loan officers want to call their borrowers, especially when they don't have answers, they're in a pickle, there's a problem. A lot of times it's left up to either the processor or somebody over at the lender's office, or you just, ignore it until you have the solution. I like your proactive approach, and I think that's the best way to handle anything that deals with a problem in the transaction.
Well, and I think it's important because, sometimes borrowers are busy, especially if they're working full-time outside the home. I have been known to send a text.
Right.
But I tell you what, every time I get I have never not gotten a text back that says, thank you for the update.
Right.
And that just, again, it's kind of the do unto others thing. You just don't want to be sitting out there in limbo. Gosh, did they get my paperwork? Have they looked at it? Is it going to be okay? Whatever. Even if you don't have a specific answer, like I did receive your paperwork. The final decision is up to the underwriter. Just something, just something. I think the customer is really, really appreciative of that, and I would be if I was on their side.
Yeah, I agree with you. And I think, as I said, the communication part between loan officer and anybody in the transaction, certainly, but for the most part with the borrower is probably the most important thing. Now, the realtor's got enough to do. They don't need to be chasing. But I think that communication between you and the borrower is really tantamount to whatever else you're going to be doing. Let them know what's going on so that they have control. And I think leaving that, up to some unknown in the air is really tough on a borrower, because most of these people, they don't know what the transaction's all about. They're not the professionals in the deal.
Exactly. And there's we love referrals. I've
Right.
In almost 32 years, I've really built a mortgage business based on referrals. And there's an old expression that says, if you're happy about something, you'll tell a friend. But if you're dissatisfied about something, you'll tell everybody.
Right. That's a very good point. Hey, Joan, we're up against it. Would you shout out your availability and how people can get in touch with you?
Absolutely. I appreciate that a
Sure.
whole lot, Jeff. Yeah, this is Joan Rebaza, and I'm here in beautiful Arizona. And thanks to Jeff, we're licensed in many states, but you can reach me at 520-975-1954. I look forward to hearing from you.
Excellent, Joan. Thank you very much, and we'll talk soon. Thank you.
Jeff, take care, and I appreciate it. Thank you. Bye-bye.
You're welcome. That's Joan Rebaza from Malibu Funding in Arizona. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning into the show each and every week. We bring to you information that you can use and learn some things about not only the market, the conditions, what's happening in the mortgage interest rates, but also what's going on in the real estate market, maybe a little bit about what's going on in the economy around you. Some of the things that you're going to have to make decisions about are really influenced by all of those things that I just talked about. And so, in order to get to it, we try to deal with it all. It's only 1 hour a week. And if you're driving around on Saturday and Sunday and you're going to the hardware store, you're going to church, or wherever it is that you're heading, and you flip on the radio station and there we are, it's a great way by which you can maintain your information base, because you never know. The neighbors, the son, the daughter, the grandparents, you in general, all of you looking to either make a move in real estate or refinance a loan or take money out of your house, all kinds of reasons to do all of that. And so to have some finger on the pulse of what's going on, that's kind of what we do on each and every week. We have a website. It's themortgagevoice.com. You can go to YouTube, Jeff Barton, The Mortgage Voice, and see us there. We have a number of podcasts that we're on. And certainly KCAA houses all of our shows in their archives. If you go to the KCAA website, you can not only hear and see the show, you can see past shows as well. Okay, I am Jeff Barton, and this is The Mortgage Voice. Let's talk about a couple things. Talked earlier segment of the show about expectations that borrowers have when they're talking about what is to be expected when they're trying to get a loan to buy a house. The other thing about expectations, which is on the flip side, is if you're a realtor and you're working with a seller, what are the expectations that you are setting for the seller? It is a different market right now, and it's a different market in different markets, meaning that you really have to do your homework and research in order to really understand what's happening in your micro market, because even in a market, let's choose any market. Let's choose Rancho Cucamonga, because I always choose that. Property values are unbelievable, but there are sections and streets where that is not true, where we are remaining flat. If you are not micro market sensitive, you cannot pass that information on to your seller. Now, we in the loan business, we look at comparables. The appraiser always looks at comparables. And if you're looking at a comparable a mile away, it's quite a bit different than looking at a comparable a half a block away. Usually we try to set a parameter around a property about what's selling immediately near that property. If we need to, we go out further, but it's a quarter mile, it's a half a mile. Mile rarely, just because those conditions change. And those conditions that change are going to set off what a seller will think their property is worth, either on the upside or on the downside. Now, the expectations as a realtor, you know darn well, if you're a realtor, you go out there and you're trying to get the listing for a property, you want to listen to everything the seller has to say, but do you want to be the first realtor in the door to give the bad news, i.e. you're not going to get that price because that's way over where your property is worth, the neighborhood, the conditions, the property condition itself, where the trend of the market is, all these things considered, your property is probably worth X, which is a great deal less, 10% less than what they think the property is worth. Do you want to be that realtor in the door that says that? I'm not sure that that's necessarily true unless it's backed up with a ton of information. Now, every seller is going to want to get the most and best and highest price for their property, just the way it is in any business, but certainly in the personal business, which is selling real estate. I'm selling my home. I raised my family here. I planted that tree. That tree is unbelievable. The buyer coming in is saying, I'm going to cut that tree down. I hate that tree. That's just the nature of how we look at things, especially when we're trying to sell in any market, but certainly setting the expectation to the seller is the realtor's job. The mortgage professional's job is to set the price according to what the numbers say, and then being able to say honestly to any borrower, if you go beyond that price, you're going beyond what the numbers say you can do, so you're going to have to go out there and either get another borrower on the loan, or you're going to have to go out there and renegotiate the price, or you're going to have to go out there and find somebody who doesn't live here to be on the loan and take the risk that you will pay for the 360 payments. All of these expectations. Now, I set an expectation when I walk into a house when I'm trying to list. There are 4 things that you have to do right away to the seller before you tell them what you think the price is. Number 1, you have to look at the condition of the house. Number 2, you have to look at the condition of the neighborhood. Number 3, you have to look at market trends. Where is the economy heading? And number 4, you have to look at what you need in order to go where you want to go, i.e., I need this number because I'm in escrow on a house, over in Shocksville, Illinois, or wherever it is you're moving. And these are the 4 things that you need to have down pretty pat so that you can go in there and set the expectation for the seller so that they have confidence that you know what you're talking about. You know that the price you're going to give them is based on fact, not on something that you're trying to convince them of, because every seller out there is already on Zillow. Every seller out there has already gone to the paper. Every seller out there has already researched what the neighbor house and why their house is better than the one that's sold for X amount of dollars down the street. So you have to have the knowledge and the experience by which to say, well, that particular property is the reason it's that priced and they got that, and why your property is different priced because you have this. Now, if you're an appraiser, you know this, but if you're a seller out there, you may not know this. Depending on what your, particular property has that the next door neighbor doesn't have. If it's comparable lot size, if it's comparable size of the house, you're really only looking at 10 to 15% difference at max that you're going to have between that property and your property, just the way it is. So if you have $1 million property, yes, next door, and it's sold for $1 million, yours might be worth $1,150,000, but it's not going to be worth $1,300,000 based on that comp. Why? Because the appraisal cannot go above 15% of what that house sold for. So you're hemmed in by whatever the neighbor is selling for. This is why many people who see people sell at a discount, especially pre-recession. If we're in a pre-recession now and you're selling your house and you're seeing the market change and you're seeing conditions in the market go down, are you going to drop your price by 10% this year in order to sell the house before it drops 20% next year? You might. But your neighbors aren't going to like it because it drags the entire neighborhood down. That's the new comp. So everybody that's trying to sell their house is aware that not only is that true, but they're trying to sell their house in different markets than it was just a year ago. So as a realtor and you're walking in the door and you're trying to set an expectation, knowing all this, because that's your job. I mean, this is what you know. You know that what you're going to tell as the price that should sell for. Last time I sold a house, which was really a condo, it was in a city of Malibu, California. $1 million, and we priced it at $1,070,000. This was a couple of years ago. I rarely sell properties anymore, but at that time, that's what we did. Now, there were several properties on the market at $1.2 million. Well, those properties, where we were selling it, there had never been a property sold at $1.2 million. The highest priced property was just under $1 million. But this is when realtors fish, or they buy the listing, or they go out there and they just pie in the sky it. Why not? Let's see what we can get. I knew for a fact that if I came between what last sold and what was available, my house would sell quickly. And it did. 2 weeks. Pricing your house is incredibly important. You must maintain your objectivity while at the same time understanding that your realtor is there to help you, not just to beat the price down because they think that all sellers want to sell their house at a larger price than it's worth. I don't know if that's necessarily true with every seller, but sellers who are able to listen to the professional who sets the expectations based on those 4 principles will be best served when they come to selling your particular house. You never want to chase the price down. You want to make sure that the price you select is within an area that you're getting a good percentage of borrowers already or buyers already buying. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show to listen to what we have to say about the mortgage rates, about the mortgage programs, about what's going on in the real estate industry. We talked a little bit in the earlier sections of the show about what's happening economy-wise, maybe a recession, maybe not a recession, rates going up and down. We see a huge range between high 5s and low 7s. Seems to be where we've been stuck for the last 5 or 6 months. And depending on how you are fixed as a borrower, what that means to you. There are a number of different ways that you can go out there and get a loan to be able to help yourself, and really trying to find programs and the ability to be able to, wend your way and figure all that out. We brought back to the show today Ciro DiPalma from Change Wholesale. And Ciro, how are you, first off?
Doing good. How you doing there, Jeff?
I'm not too bad. Thank you very much, and thanks again for doing this on today and on the show. What is happening in the mortgage rate world, and why does that not really affect what you're doing over at Change?
Well, the mortgage rates, they've kind of been in this little range here of,
Yep.
say, 5.5% to 7% over the last 6 months or so. And, it's just how the market is trending right now with the mortgage-backed securities and the 10-year mortgage note.
Right. Okay.
As far as what's going on at Change Wholesale, we are a nationwide lender here in the wholesale channel, and we are a CDFI lender, which we are approved by the U.S. Treasury Department. If you folks don't know what CDFI means, that is a community development financial institution. And what Change Wholesale tries to do is basically bank the underbanked community. So we're a CDFI lender. We're able to give lending solutions to borrowers who wouldn't normally get financing from your normal bank, and we're able to do that through our CDFI designation.
What does that mean? What do you mean couldn't get a loan? Is it FICO driven or job driven or just in a poorer area? What does that mean?
So the way we look at a borrower's creditworthiness is we're going to be looking at down payment. So our CDFI designation allows for basically a no income, no employment loan transaction for owner-occupied and second home transactions, and we basically need to have at least 20% down. We are looking at the collateral of the appraisal, and we need to have at least 12 months reserves for the transaction. So putting down a large down payment and having additional reserves for a borrower gives us more ability to lend for someone who may have certain criteria. Let's say they're not able to fully document their income.
Sure.
Because they are a self-employed borrower and may write off a lot of stuff, or may have other different areas of interest where they don't have as much income to show. But I have the ability to put down a larger down payment and have the reserves. So we do that on that type of program. We also have our 12-month bank statement program for self-employed borrowers. And, of course, we have our traditional financing where we do Fannie Mae, Freddie Mac, and FHA and VA loans for fully documented borrowers.
You know, if you have that criteria by which you're going to lean heavily on the down payment, what happens in a descending market where you see, because that's maybe where we're heading, right? If we go into a recession, we may see property values drop. How do you deal with that aspect of it if, you know, you're expecting 20% to be the collateral on the loan, but then all of a sudden the property's not worth the amount of money that you lend on it just because we have either inflation or the economy goes down or the real estate market crashes a little bit? Are you worried about that at all?
So the way we look at that right now, obviously the borrower has different options as far as financing terms. You can do 5-year terms, you can do 30-year term.
Right.
But as far as the collateral of the transaction, you know, we'll look at declining markets and stuff like that. If we have an appraisal that comes in that shows is in a declining market area, then we do have to reduce the loan to value by 5%. And we
I
require
see.
a little bit more down payment of, say, 25%. But as long as the market by the appraiser is marked as stable, then we'll still be able to lend in that market of that 80%.
Okay, that's interesting. So a lot of people think that when appraisers do go out, they're just looking at the house itself, maybe a little bit around the neighborhood. But you're saying that overall market conditions is one section of the appraisal that they're looking at, which we've been talking about on the show all day, just about market conditions other than the house itself and why that's a very important aspect of the sale. Some people think that if they go into a neighborhood that maybe not as well kept as some other neighbors, they get a better deal. But it may hurt them in this particular program because the appraisal may not come in where you want, and you'll have to put more money down.
That is correct. So it will all depend on the market conditions of, you know, each neighborhood is going to be a little different. Orange County, LA County, San Diego County, Silicon Valley. Each market has its different areas. So as long as the marketplace is stable, based on the appraiser's opinion of where he sees home values, then yeah, we're going to be going along with that value based upon the appraiser. Okay,
so the show today is at KCAA. We're broadcasting out into some LA, some Orange, out into the San Bernardino and Riverside counties. Do you do a lot of lending out there?
Yeah, so we're a nationwide lender, as I touched on. But yes, we do all of Southern California, Northern California. We are doing lending. We do lots of lending in the Riverside and San Bernardino County as well.
Okay, excellent. What do you see as an impediment to the business growth this year? Is it just the economy itself? Is it inflation? Well, what are you seeing from Change's viewpoint? What do you see?
I mean, you know, we focus on the purchase market, as every other lender does out there, and we'll still target cash out refinances. Obviously, the rate and term market definitely has declined in that aspect. But, you know, we plug away and we kind of see, you know, hopefully rates are just kind of stay steady and don't increase any more inflation fears. But we definitely see, you know, the spring buying season has definitely picked up. Okay, now, good that you brought that up because I've been talking about the inventory and how the inventory didn't really pick up. Are you seeing more purchases or your purchase mortgage applications go up, or is it that really dependent on the interest rate rather than the availability of houses? It's going to be driven a little bit on interest rates. Definitely the availability out there of homes on the market have declined, but you are seeing a lot more building going on to offset that. So, with rates being higher like they are, you don't see as much property availability out there. That is for sure, because people are holding on to their lower interest rates. So we'll have to see how it goes throughout the rest of 2023 and see if we can get some more availability out there on the marketplace. Other than the loan products that you talked about, do you have other loan products that you might want to recommend? We have about a couple of minutes left. Certainly. So we touched on our CDFI community program. Right. We offer the 12-month bank statement program for self-employed borrowers and W-2 wage earners. Those also go to 80% LTV for purchase, rate and term, and 75 LTV for cash out. Our traditional Fannie Mae, Freddie Mac, FHA, VA, we lend on all of those products as well with no lender overlay. So we're going to go off directly with what Fannie and Freddie have to say about it, right? Yeah, whatever the agencies go with. And then we also have our DSI, which is going to be for investor loans. So We can do those up to 75% purchase and 65% LTV cash out. For those who don't know what a DSCR loan is, basically going to be an investor loan where we qualify based on the property's availability for rent.
Yeah, I like that program. I always have, a lot of lenders are using it. Do you have any particular? I know that there were some additional incentives for a DSR type of loan that had come out from a couple other lenders. Do you guys just go straight with whatever the rents say, that's what it is, or 75% of the rents?
So typically when a rent survey comes in, we will lend on 100% of the rental rents that come in. We do allow for down to 0.75% of the rents that come in at a reduced loan to value.
Okay, I see. Okay, well that's interesting. So in a DSCR, you're looking for 25% down. You'll end up to 100%, but depending on how much you put down will depend on the rest of the ratio.
Yeah, so whatever you're going to be putting down rate-wise, and then if the property actually does debt service or not. So we can qualify an interest-only payment if that helps the client out to have to put down less than need be. We do have that option as well.
Oh, excellent. Now, you've been around a long time in the business. I know I've talked to you probably, I don't know, at least 10 years. Tell us where you think we might end up in the summer. Do you think that we see a coming recession? Do you think unemployment will be hurt a little bit? What do you think about rates? Just give us your sort of experience in all this. Give us the wisdom that's behind it.
Certainly. So I think that we'll see one more Fed rate hike
right
in May for a quarter point, and I think they will let off the gas and they will just see how the economy is working. I think most of us are hoping for a soft landing.
Yep.
And see where that goes, and we'll see how the employment numbers are.
Yeah. Right.
It'll be business as usual when we get a soft landing out of this.
Yeah, no, I agree with you, and I have said as much on this show today. So I appreciate the information and the confirmation. We're at the end of it. Thanks, Ciro. I really appreciate you coming on the show.
You got it, Jeff. Good, always good coming on.
Great. Could you shout out a way by which people can get in touch with you? Maybe a phone number, an email, something?
Certainly. Name again, Ciro DiPalma with Change Wholesale. Phone number 949-351-8599 for any of your real estate and mortgage lending questions.
Thank you very much again, Ciro. Thanks a lot, and we'll call you soon.
All righty. Take care.
Thank you. That's Ciro DiPalma from Change Wholesale. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for tuning in to the show. Each and every week we come to you at KCAA in the Inland Empire. I want to say hi to all my friends over there. They do a great job at bringing us to you. A couple of great signals, both AM and FM. And again, great to have them. We've been out with them. How long have we been with KCAA?
Since before my time, Jim.
Exactly. Okay.
So it's been at least 5 years.
Yeah. Okay. Very good. Okay. And at our current location in the studio, we've been here when Daryl's been putting all of these shows on YouTube, but we're also on a number of different podcasts. Daryl, do you have that list for us?
I sure do, Jeff.
Thank
it's
you.
Apple Podcasts, Spotify, Spreaker, Stitcher, iHeartMedia, Radio.com, YouTube, Podclips.io, and TheMortgageVoice.com.
Excellent. And if you want to go to a central place to find all your podcasting desires and wants, one good place to go to is Podclips.io. And that's a great place where you can see financial and health and sports and lifestyle and all kinds of different experts in the field talking to you one-on-one in the podcast area. Go to it, Podclips.io. Okay, Jeff Barton, The Mortgage Voice. Thanks very much for tuning in. And let's get right to the rates. I want to talk a bit more about rates and some of the specifics of what's going on in the mortgage industry, which is obviously affecting the real estate market for both first-time home buyers and anybody who's selling a house. 30-year fixed rate, 6.7%, 6.05 for the 15, 6.27 for FHA, 6.13 for jumbo, and 6.79 for the 5/1 ARM. Yes, that's true. The 5/1 ARM, which you would think would be a lower interest rate is not. And it's been that way for, 6-8 months. They don't want you to do those 5-1 arms. And the reason they don't want you to do it, because there's great risk when we're not quite sure where the housing market is going. I went to, and maybe you do this too. I have a number of websites I go to. Let's say I go to the MSN website, right? And their homepage, and they have a finance section, and I go to it and I click on it and I scroll down, and the way they do their headlines, and however it is, it's a box with a picture and a bit of a attention-grabbing headline. So many of the headlines there are housing crash, housing problem, reduced prices. The other half of any of these boxes that refer to housing says housing is going to be great. The prices are going up. There's plenty of availability. So it just tells you that even large companies whose job it is to provide information in order to drive advertising, right? That's what this site does, or Yahoo, or any number other. So if they're confused about what's happening in the marketplace, you as the consumer are also confused. If you're in an area, let's say you're over in Rancho Cucamonga, and it's, houses there are still $750,000 to $1 million, $500,000 a starting place. Yeah, you're thinking, wow, this is unbelievable. You got 3.5% unemployment rate. People are working, spending money. You see a lot of new cars. So you're thinking, wow, we're doing pretty good out here. Well, you go to a different city. Let's say you just go over to Riverside or San Bernardino, some of the areas there, and you see, okay, nobody's bought a new car in the last couple of years. Rents keep going up. People are complaining that there's not enough work. This is what's happening all over America. It's not just here. Will we be in a recession? Will we not be in a recession? Will inflation continue to go up? Will it not go up? All of these things affecting buying and selling decisions. The main thing here for most buyers, if you've got a good job. Now, what is a good job? $200,000 a year? Last week we were talking about $200,000 a year not being enough to afford a new house. Well, that's true. But what we see right now in the interest rates is we see 6.7% for the 30-year. That's kind of the broad-based average of what we've got going. Well, it's not 7%, but it's not 5.75% either. So if we're in the fives, anywhere in the fives, the market's going to do great. People can afford it. If we're in the sevens, anywhere in the sevens, the market's not going to do great, and people can't afford it. So we're like kind of in that netherly region where we're trying to figure out where are interest rates headed. My gut feeling is we're looking for a swing between the high fives and the low sevens all summer long, probably into the fall, where some are predicting that dreaded recession will be here. Mild recession, this is what they call it, or soft landing. All of these terms really mean that some of you out there who've got a great job and are feeling good about themselves are going to lose that job. That's basically what we mean by when we're talking recession. People losing their jobs. Now, why is that important? Because we've got a market where prices continue to rise. Now, in some markets, they're really rising. Okay, let's see. Places like San Francisco and places like Seattle and Sacramento and Oakland and Austin, all of those cities, prices have fallen. But the top 50 markets, we probably have 60-40, 60% rising, 40% falling. Those markets where we saw house prices rise dramatically during COVID, yes, we've seen some retrenchment, i.e. Austin, Oakland, San Francisco, Seattle, and Sacramento. Some of the cities like Miami, Jacksonville, Fort Lauderdale, in Florida, and I choose Florida because that seems to be a state where prices on housing keeps rising. Now, the company I work for, Malibu Funding, we have offices down in Florida, and they continue to say, hey, real estate's great down here. There's a lot of money. People are buying. But again, in certain areas of the country, that's true. But in other areas, it is not true. So where does that leave us here in Southern California? And you're a person trying to buy a house, and you're somebody out there who's looking around to try to find a way by which you can afford to get into this market. We know rents are falling. One of the things that we talked about last week, and I'll talk about it right now just quickly, is that we've seen rents fall as much as 25% in certain cities in San Bernardino and Riverside counties. Now you're saying, well, where's that? Well, just the best thing to do is to either find a realtor or go to for rent, FRBO, for rent by owner. And you will see, even in the the rental market on a short-term rental. You can see that prices have fallen dramatically and will continue to. And one of the main reason here is there's a glut of rentals on the market and more coming. We've seen, where's the stat here? Hold on here. I got it right here. Let's see. We see that there are more housing coming on the market in the rental area than there have in the last 2 decades? I think that's what it is. I can't find it right here, but that's what I think. So with that happening, what we're seeing, obviously, if you're out there and you're looking for a house to buy and you can't buy, good news is you can rent something, and you can rent something cheaper. The bad news is that it does not seem as if we're going to see more houses being built, because there's such a fear by major builders out there that if they do build at a certain price point, because that's where they see the house prices going, and we do enter into a mild recession, i.e. the third or fourth quarter of this year, you're going to be sitting with that property when it's built, unable to sell it because you just don't have enough buyers with interest rates the way they are. So if we have, and this is one thing I want to talk about right now. Okay, so the Fed, what is the Fed going to do? Now, the reason I bring up the Fed is because mortgage rates tend to follow what the Fed is doing. If the Fed rate goes up, mortgage rates go up too, okay? And usually when the Fed rate goes up, we see also the bond market also go up, i.e. the yields go up. Price for the bond goes down, and the yield for the bond goes up. They're inversely related. And so what that means is, in order to sell U.S. debt, you have to buy a bond. And in order to buy the bond, it either goes up or down in price, and the yield that you make on that bond either goes up and down in price. And that's really how we gauge what the mortgage interest rates are going to be. So in all of this, what are we talking about? The Fed may raise 25 basis points next time they meet, which is next month. 25 basis points and then a hold. There's a couple of people on the Fed. Bostic, yes, this guy named Raphael Bostic, he's the Atlanta Fed chief. He thinks that's what we're up to, about 25 basis points, and then that's going to be it. Meaning that they need to stop at some point so that the recession can be short-lived and shallow. And that would help both the economy, it would calm markets, it would allow first, second, third-time home buyers, anybody who's out there looking to be able to feel secure that their job isn't going anywhere. All of these things are very, very important. And we've had the Fed consistently say over the last year that the only thing they're interested in is lowering inflation. Well, Bostic says 25 basis points, and then that's it. We got about 30 seconds left. A couple of other things going on here. Let's see. Recession, the St. Louis Fed Ballard says no, there won't be a recession. So this is what I mean about, depends on where you go for your information and who you listen to. Even the Fed is a little mixed up about what's happening. If you're in the market right now, you see something you like, you want to put down an offer, just make sure that you can afford the monthly and that your job is secure enough. And the only way to really do that is to sit down with pen and paper and figure all that out. Listen, I'm Jeff Barton, your voice in the mortgage industry. Be glad to help you anytime. Please get in touch with me. You can follow me at Jeff at 6493. That's my Twitter handle. And obviously at the Mortgage Voice website. Thank you very much. See you next week. I'm Jeff Barton.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.